Hello everyone. Well, today's topic is going to be really interesting for all of you because it relates to you very well. How many of you like to have discounts? I think every one of you, right? So today we are going to learn about accounting for discount. Today I am Aarti Mudliar from the Department of Commerce, Assistant Professor. I'm going to tell you about two types of discount, that is trade discount and cash discount. Well, my dear students, trade discount is something which a manufacturer provides to a reseller at the time when the reseller wants to purchase the goods in bulk. So, to reduce the catalog price, well, what do you mean by catalog price? Sometimes the manufacturer provides the catalog of his products to the retailer or the resellers. So, the price that is quoted on the catalog is known as catalog price or the list price. But when the buyer wants to purchase the goods in bulk, that is in large quantity, then he may require some discount. So, the discount that is provided by the manufacturer to the reseller at a reduced price, that difference between catalog price and the actual selling price is known as trade discount. So, let us learn first about trade discount and its accounting. Okay. So, my dear students, when we are going to record the journal entry for trade discount, first thing we need to keep in mind is trade discount reduces the selling price itself, right? So, from the seller's point of view, if the selling price itself is reduces, there is no need to record the trade discount amount while passing the journal entry. Whereas, at the time of purchase, when the purchaser is buying the product, the purchase price itself reduces by the amount of trade discount. Thus, even the buyer doesn't record the amount of trade discount. They will record the transaction at the reduced price itself. So, let us look at some journal entries and understand it well. So, here is a question where we are finding that in the books of X brothers, we need to pass certain journal entries of sale and purchase. The very first one being goods sold to Mr. A of rupees 1 lakh. Now, look at this. The very first thing that we need to write is the year, that is 2023, the month, March 3rd, and then we would write the journal entry. I hope you all remember how to pass the journal entries, right? We already had discussed the rules for passing the journal entry. So, since the goods have been sold to A and nowhere it has been mentioned whether it has been sold on credit or cash, we will assume it to be a credit transaction. Thus, here A is the buyer who is a debtor in the books of X. Therefore, we will debit A to sales. Sales has been credited because sales is a revenue, and we would simply write the amount, that is rupees 1 lakh, both in the debit column as well as in the credit column. Did you observe any reduction in the prices? No, the goods were sold only at the list price itself, that is at 1 lakh rupees. So, in this particular transaction, there is no case of allowing discount or receiving discount. Look at the second transaction. Received from A in full settlement of his account. Okay. So, this transaction says that against 1 lakh rupees, the amount received is how much? 98,000. Thus, in the next entry which occurred on March 5th, so we will first write the date, that is March 5, and we would record the receipt of the cash, that is cash account debited. And since we are paying him lesser amount against the amount which was to be paid to him. Now, there is already a debit balance in A's account, right, which has to be settled because in the transaction itself it is written that the payment has been made in full settlement. Thus, we need to write to A's account with 1 lakh rupees. What we have done over here is we have closed A's account. A's account in the previous entry was debited, and in the very next entry it has been credited, that is the account has been closed. But how much of amount did we pay to the person? Only 98,000, right? Now, the rule for journal entry says that it should be balanced. The debit and credit shall be equal. So, do you find that the debit and credit is equal? No, there is a difference of rupees 2,000. Now, why is there a difference of 2,000 rupees? This is because of the cash discount, and there comes the next type of discount, and that is cash discount. This discount is allowed as the person wants early payment. The seller who has sold the goods to the debtor or the buyer wants early payment. So, for getting prompt payment, they may allow again a reduction in the value to be received, not in the price of the goods. And this is recorded in the books of account because the account has already been debited or credited for the other party. So, now how do we record it? We will simply debit discount allowed account, which is an expense, and thus this account also has been debited as increase in expenses are debited. I hope you all have understood this. Let me repeat this once again, that once the goods have been sold to Mr. A for rupees 1 lakh, his account was debited. While he was making payment, he paid us only 98,000 rupees and asked a discount of 2,000 rupees from us, which was not given in the transaction, but we have found it as a difference between the account, total account balance, and the amount received from the person. So, whatever amount has been received has been recorded as cash account debited, whereas the difference between the two has been recorded as discount allowed, which is expense for the seller. We can fill in our narrations also, being goods sold on credit. And for this as well, we may write the narration being amount received allowing cash discount. We may simply write discount only instead of writing cash discount. So, here is the complete transaction recorded in the journal form. And as soon as we have written the journal entry, we will close this one. Every journal entry must be closed by drawing a line soon after that. Let us look at the third journal entry. Here, sold goods to B worth rupees 80,000. All right. So, let us put the date once again. This has happened on 6th of March. Now, we will again consider it as a credit transaction because again cash has not been mentioned over here. So, we will write the similar transaction just as the previous one. Instead of A's account, we will write it as B's account. B's account debited with rupees 80,000, right, and these goods also were sold on credit. But on 8th of March, what has happened? B has returned goods. We are learning simultaneously certain special entries as well. Now, when this party is returning us goods worth rupees 1,000, we have to record it. Thus, we will record it as, now since the goods were sold, the returns made on that account is recorded as sales return. So, sales returns account debited to. Now, since the trade receivables are reducing, that is the goods that were sold to B, he is not liable to pay us for this amount now. So, we will debit his account by 1,000. And here his account has been reduced. Right, as you can see, B's account has been reduced by crediting the account by 1,000. So, earlier his account was debited with 80,000, now his account has been reduced by 1,000. Now, who can tell me that how much amount is receivable now? Obviously, the difference between the two, that is 79,000. Now, let us look at the entry that how much actually we have received from him. The next transaction says, on 15th of March received from B in full settlement of his account only 78,200, right? So, against 79,000 we have received only 78,200. That means again there is a difference between the amount receivable and the actual amount received. Let us first close this account. We will record this next transaction, that is on 15th of March. Cash account debited. The easiest way is to record the amount, that is 78,200, against the amount receivable. Now, how will you say that what amount was receivable? Just now, as we discussed, to B's account, the difference between 80,000, that is the goods that were sold to him, minus the amount that was returned by him, right? 80,000 the amount of goods sold to him, and 1,000 worth rupees goods were returned by him. Thus, the amount receivable was 79,000, and against 79,000 we have received only 78,200. Thus, there is a difference. So, 79,000 minus 78,200, and this gives us a difference of 800 rupees. This 800 rupees which has not been received is the discount allowed by us. Again, what type of discount is it? Yes, of course, cash discount, because while receiving cash, the discount that we have allowed to the person is called cash discount, and it is very much recorded in the books of accounts because the transaction had been recorded at invoice price. So, let us write the same transaction narration over here. So, here we are able to identify in these examples that how cash discount can be easily identified if the amount has been received or paid. Look at the next entry. It says that on 16th of March received cash from Mr. C 19,500 and discount allowed 500. So, in this transaction the amount of discount is clearly given to us. Why we are receiving from this person an amount of 19,500? We might have sold him certain goods of rupees 20,000. So, why? Because the cash received is 19,500, whereas the discount allowed to him is 500. Once we add these two amounts, the sum is 20,000. That means we might have sold goods worth rupees 20,000 to C, and now against 20,000 he is paying us only 19,500. Thus, we will record the same transaction as on 16th of March. Alright, now the word March we have already written once on the top. So, every time we need not repeat it like March 16th, March 15th and all, we may simply put the dates. Now, since only the cash has been received on this particular date, we will be straight away writing cash account debited. Discount was naturally allowed. So, we are first writing discount allowed to him. The amount received was 19,500. Discount allowed was already given to us, which we were usually finding out in the previous two entries, and here we will write his name, which is C. Alright. So, we will simply write Mr. C over here. Now, in the previous two entries, the aggregate amount of sales was given to us and the amount received was provided. We were finding the amount of discount by deducting the amount received from the amount of goods sold. Here we are finding the amount that the amount receivable from C. We are not recording the sales transaction here, we are only recording the cash receipt transaction, but we have found the amount of the trade receivable, right, which is 20,000. A same narration would suit here as well. So, we have written the same narration. Now, let us go for the next entry. On March 20th, paid cash to D and discount received from him. Now, why are we going to pay D a certain amount? We might have purchased from him. So, against that purchase transaction, we are now paying him rupees 4,700, for which he is allowing us, he is allowing us a discount of 300. That means what was the trade payable amount? The sum of 2, which is 5,000 rupees, right. So, that means the amount payable was rupees 5,000, which we shall be recording over here now, and the date was 20th. We are coming to our format once again. We will put the date first of all, that is 20th of March. Now, since we are paying the amount to Mr. D, so D is the recipient of the amount. So, the rule of personal account says debit the receiver, right. And since we have received the discount, this is income for us, and incomes are credited. Thus, we will write to discount received. Okay. So, this shows very clearly that there can be two types of discount, which is one when we are allowing discount, two the trade receivables, and the trade payables may allow us discount, which is called discount received in our books. And since we have received cash, we will write cash account also here. What amount of cash did we receive? 4,700. How much of discount did he allow to us? 300, and thus we had found the sum of trade payable, which was 5,000. Now, the account got settled by 5,000 rupees. The account was of 5,000 rupees, against which we have paid him 4,700 only and received a cash discount of 300 rupees. So, now the narration would change, being amount paid in full settlement after receiving cash discount, or simply discount also you may write. Let us move through the next one. Okay. The last one for this is on 25th of March, sold goods to E of the list price 25,000 and a 20% trade discount, right. So, both the things are given here. We need to find the amount of trade discount by calculating it on the list price provided. So, a small calculation we will do here itself, computation of trade discount. First thing we require is list price, which is 25,000, and we will deduct trade discount, which is to be computed on it at the rate of 20%, fine. So, here we are calculating, please look at it very carefully, 25,000, and on this we are going to compute discount at the rate of 20%. So, this is how we are going to calculate it, 20% simply on 25,000, that gives us 5,000 rupees, which we are going to deduct, alright. So, from 25,000, if we deduct simply 5,000, we get the result 20,000. So, this is what we require. What is this? This is the invoice price. The resulting amount is the invoice price at which invoice shall be raised. Okay. Now, we have got all the amounts. So, we can move towards our entry on 25th of March, since the goods were sold to Mr. E. So, we will write E's account debited. Should we write the amount of discount over here? Not at all. This is trade discount, which has reduced the amount of sales. So, we are going to write the reduced selling price, which is also known as invoice price, and that was 20,000. And a simple narration we may write over here, being goods sold. Alright. So, now I hope that recording of discount is a bit clear to all of you. Today we had studied about what is cash discount and what is trade discount, and also how to find out cash discount and trade discount. In my next video, we will be discussing more and in depth about cash discount and trade discount and its accounting. So, stay tuned.